Good evening everyone, this is Srikanth Rajan and welcome back to the Market Pulse video where we discussed about what happened last week and what could be expected the next week. So if you look at last week, Nifty was looking all the way strong in the first start of the week, and it was looking as if it is going to break out from here and we could see an all-time high. But then all that was lost in just 2 days, the last 2 days, Thursday and Friday. We could see the fall starting off on the expiry day, and from there it went on the Friday as well. So it was a big continuation of the fall. And right now, Nifty is at 18,665, which is just very close to a very good support zone. In fact, a very good support zone would be right from 18,500 to 18,600 on the downside, and on the higher side at this point of time, of course, 18,900 to 19,000 will act as a resistance zone. So at least that chances of breaking out at this point of time looks bleak, and I feel that the markets are going to stay within this range of 18,500 to 19,000 for this week. But then very important thing that we need to understand what happened last week. So first thing is, of course, there were good things happening in the US. Of course, the rate hike did not happen, but then the Federal Reserve actually came out and told that they are going to have two more rate hikes. Though the good thing was that in spite of all this, the data has actually come bad in the US. That is, the people who are claiming for jobless claims have actually increased, which is negative for the US as such. But then for the market, it is positive because that reduces the chances of rate hike by Federal Reserve. But then my gut feeling says that whatever the Federal Reserve has told, the way it is told aggressively, it actually shows that they are going to have two more rate hikes by end of this year and in calendar year 2023, and then probably they would be going for a stop. In fact, the entire US markets have been on a negative note this entire week, and we were expecting the US market to actually close negative on Friday, and that's exactly what happened. If you remember, Pro Shivarna, I had told you I'm expecting US markets to be kind of closing negative on Friday, and that's exactly what we happened. And right now, of course, SGX Nifty is trading slightly negative, so which might indicate a small gap down opening. But then again, we need to have a look at few other things that happened globally after the markets closed in the US. So of course, we'll discuss that later. Coming back to Indian market. So if you look at Indian market, the next challenge that Indian market had was from the Adani Group. So, as like SEBI in India, there's an organization in the US that takes care of the market. So they are now kind of getting into details on what happened exactly with Adani Group. Now, I really don't understand what is their role to play with Adani Group. But of course, the Hindenburg report actually came from the US. So what is that, that what is going to come out of that inquiry is something which is kind of giving some fears to the market. And we could see Adani Group actually falling big on Friday, and that's exactly what kind of pulled the market down. The second instance of problems in the market are actually related to HDFC Twins. So HDFC Twins merger we discussed last week, because of which a lot of mutual fund companies which are holding both these stocks have to shed some stocks just for the reason that they have to maintain the guidelines as the government has given them for investment mutual funds. So they have to reduce that. But then HDFC merger is such a big deal that it is kind of affecting the market at this point of time. But I'm sure HDFC Twins are going to perform over a period of time. But then people who are investing in mutual fund don't have an option, because government has a rule given there wherein mutual fund cannot invest more than 10% into one stock. So when all those mutual funds which are holding like 10% each, probably in HDFC, bank and HDFC, when it gets merged, so they cannot have more than 10% in one company. So they will have to shed out their equity. So that is one thing which actually gave some negative in the initial start of the week. But then that has started recovering by end of the week. But then the Adani saga came in again. Apart from that, if you look at Reliance was looking very positive in the start of the week. That also shed points as the oil prices. In fact, that reminded me, oil prices have been very erratic of late. One day it goes up by 3-4%, another day it comes down by 3-4%. It was never such volatile. So right now, that volatility is actually hitting Reliance also. Reliance being a oil, refining company, for them, a rate hike in oil is actually good for them. And as oil prices fell, we could see Reliance also falling on the weekend. So all this together actually gave a negative sentiment to the market, and the markets have actually closed lower. Now, like I told you, the important support range to be looking out is 18,500 to 18,600. If that range is broken on any of these days, it could actually be a danger situation, in the sense it could be meaning that the markets are turning bearish for a shorter term. Now, what is happening also this week is something very important to know. As trader, I am a trader myself. In fact, we had a very good profit last week as well. But then the next week is something where I'm going very light on whom I'm holding, and also I'm planning to exit by Tuesday. Why? First thing, it is going to be the monthly expiry, so markets are going to be extremely volatile. That is first one. Second thing, since the market is in a situation where it's not broken down, nor broken out, nor broken down, so it could give a big movement either side. The market has been a consolidation phase, so we could see a movement either side, which may not happen this week, but in the upcoming few weeks it's going to happen. But along with that, some important events happening globally as well. So if you look at this Wednesday is a holiday due to Eid, and this next thing on Wednesday, there is the Federal Reserve Chairman Jerome Powell speaking in the US. So he's speaking in the US on Wednesday as well as Thursday. So what comments are going to come from his side is something that needs to be watched. But then at this point of time, I feel that he may not be going really hawkish this time, because last time he went hawkish the previous week. Markets have actually been negative. So since markets have been negative, they don't want it to fall further as well, because at this point of time, they have to kind of balance the economy. In fact, a lot of indicators say that US are going to face the recession probably by end of the year. But then they don't want it to go into recession. So if it goes into recession, it would not be a soft landing as expected by Jerome Powell. So they are going to they have to find a balance between going for a soft landing and a hard landing. In fact, a balance between how the interest rates can be hiked without disturbing the economy much. So if further rate hikes happen, will more banks collapse? All these are questions that actually come to the mind. So at this point of time, markets are in a point where they don't have a clear direction whether to go up or down. So at this point of time, markets, I'm not expecting to make big movements. However, I'm looking at the expiry happening between 18,500 to 19,000 this week. But then apart from that, the next important thing is Wednesday being a holiday, and Jerome Powell speaking on Wednesday in evening in US, and Thursday directly opening on the expiry day, the monthly expiry day. Markets are going to be very volatile, and I would, as a trader, prefer to stay away holding up any overnight positions during this week. So Tuesday, I'm planning to exit my positions, and Wednesday onwards, I would be kind of taking a break. And Thursday, like I've told you earlier, on Thursday I'm leaving to Dubai. So we are expanding to Dubai, MPI Invest. So I would be there for 1 month. So that 1 month of I would be there, and from there I would be, of course, continuing with the podcast. I'm not sure how to set up things. So once things are set up, probably we might miss a day or two. But then as setup is done, we would get back to action. So I would be kind of clearing up my positions and going before I leave. That is the first thing. And second thing, of course, with all these volatility in the market, unless you're an expert trader, I would tell you to kind of stay away from the market at this point of time. But as long as the investor is concerned, what should you do? So you should see this correction as a good opportunity to enter if you missed out on the rally earlier. So first thing is, again, go ahead on a SIP mode of investment, because you never know where the bottom is. But of course, any range within around 18,500 actually looks good to add more into the market. So that's an expectation. So for this, like I told you, the range is clear, 18,500 to 19,000. Again, the next important thing is, last week we also had SGB issue closing. So I'm sure most of you have subscribed to it. It's the best way to invest into gold. Diversification, which you can always do. And for traders, it's a great way of adding gold, because this also can be utilized to pledge as the cash component. So apart from that, if you look at the next part of this week, it's a shortened week because of Wednesday holiday. So we have Thursday and Friday, in Monday and Tuesday. So 4 days of trading week, and the new month is going to start. So June as a month has been mixed for the market. So July is something that we need to look forward to. Will the markets actually break out in July or break down in July is a big question. So that's something that we need to watch out for. So for a like 1 month term, I really don't have a direction right now, because markets are in consolidation phase. So probably we'll have some clarity in a week or two based on how the markets move. So based on that, of course, I will share my opinion about it. So that's it for now. I think we've covered it all. If you have any questions, do put it in the comment section, and we will answer it in the next podcast. So that's it for now. This is Shrikant signing off, wishing you all a great week ahead. And of course, we will catch up for next Market Pulse video, hopefully from Dubai. Goodbye. Have a great week ahead.